Welcome in, everybody. You guys ready for a show? You ready for a giveaway? You ready to get some free accounts today? You're locked in. I like that, Benson. Today we have Bowie with us. He's going to be going over some ICT stuff, some emotional discipline stuff, all the things that actually matter in trading. Hello, King Monk 44, giveaway win, 75 likes. I don't think that's too much to ask. As we grow, we should probably start asking for more likes. Selfish reasons. We want to grow a channel, provide good information to traders. And I think that's the premise of our show. We're always trying to invite people on the show that have some good insight, that are actually trading, that understand risk, all that stuff, right? All right. Bowie, you there? You there, Bowie? Bowie?
Yes. What's up?
How are you doing? Bowie's here. I'm doing good, man. How's things been going? I heard you got in like a accident or something on a motorcycle.
Yeah, pretty much rough last couple of months. I went to Bali, little vacation, and tried to ride a motorbike. Did not go very well. After 2 weeks, I got into a crash trying to visit a waterfall there that's famous. So, but all good now. I can walk again and getting back to trading, getting back to everything. So,
wow, that's scary, man. Yeah, motorcycles are very dangerous. I got hit on one. I had the crotch rocket though, doing the wheelies and all that other crazy stuff. But I did get hit by a car on one, and that was fun. People don't see you, so.
Oh no, where?
It was when I lived in California. So I was just going to work, and dude side smacked me. I went down. He took off. I was like, "Oh, see you later, bye," and he was gone. It was what it was. Cool, man. Let's get into the first topic. Discipline. I think that's under pressure. Is this the right notes? Raj? I don't know if this is the right notes for the show. I don't know. Are they, Raj? Oh, nope. He's deleting them. So I don't think it's right notes. We'll just wing it then. Bowie, I know you're an ICT trader. That's a hot topic for a lot of people. Does ICT work? Does it not? And let's hear your opinion on it. What do you do with ICT? Tell me.
To be quite frankly, I think everything works. It is just at the end all about what you do with all the concepts that you learn. I myself learned ICT concepts, but it's not that I directly learned from the master himself, being ICT. I just focused on getting the information from people that already studied ICT for the last couple of years and already have grasped the most important concepts from them. So some couple names I can mention is like Justin Warline, very good guy, very good trader. He's an ICT trader himself, and he knows how to simplify ICT and how to make it understandable for a majority of people. I'm not saying it's hard, but I mean, probably the ICT lectures, they can be very long.
Yeah, I think years and years ago I looked at it just to see if I could add more tools to my tool belt, kind of thing, and I was like, some of the concepts are very familiar to other ones. They're just renamed, and I think that's what happens in trading is they're the same concept, but they're renamed different things by different people, right? And a lot of what I see talks about was it order block, or is it order blocks? I forget. I don't know. It's been a while since I looked at it.
Shit, man. It's a lot.
Yeah, it's a ton of different things, but they are theories and they are edge. They do create an edge, but the issue with most traders is they have an edge, but their edge is eroded by their emotional and the discipline and all the things they're not doing that they should be doing that are the most important. It's really not the strategy that's the most important. It really is mastering yourself and getting good at that. He added some notes. Does ICT work? That's a good question. I think we're already getting into that. As you said, all strategies work. It's not the strategy, it's the person. So,
yes, I think it's important that you just combine everything that you think makes sense to you and then craft your own system. That's really just what I did. I'm not an IC3 trader from the core. I use other concepts, but mainly ICT and then quarterly theory. I think you remember from the stream we did earlier. And I just made my own stuff that makes sense to me, and I think that's the most important thing.
I 100% agree. It's you don't have to force yourself to trade that exact way, the system, but you can take little nuggets that make sense to you as a trader and help bring them into your strategy and your style.
Yeah.
So is there a concept themselves? So can you give me like a quick, really brief summary? What is ICT? How do you utilize it? Like the simplest way possible. And I think that will help some people.
ICT explained in a simple way. Let me try.
I know it's not simple, but like as simple as possible. Like,
I mean, yeah, to be honest, it's a bunch of things, right? You have order blocks. ICT mainly talks about liquidity, market maker models. I think those two are the most important things that you can learn from him. He gives you entry models, like models to trade during specific sessions. I think it's just a way of viewing the market. It's not really easy to explain in a couple sentences, but I really think that the most valuable thing that I could grasp from ICT is like the market maker models. If you deep dive into that, I think it's like it opens your eyes on to see, okay, where are we in the market? What are the targets? Like, how can we see when the structure is ready, when we can finally get the volatility? I think market maker models, liquidity, I mean, it all combines into one thing, like gaps, trading in important times. Like, it is not just a strategy, it's just all different concepts that he uses to trade and teaches others. So yeah, that's pretty much all I can say.
Is it more like a framework that stays consistent? Like it doesn't change every day? Does it stay pretty consistent? Like, can you basically look at the market the same way every day because of his teachings?
Not at all. Not at all. There's so many ICT traders that are just, oh, I'm long, oh, I'm short, and no, I'm seeing this breaker block, but I'm seeing this market maker buy model. So it's like, it is just some way to view the markets. It's just some little things that you can grab from him and then make your own strategy. But obviously, the other people, they make their own strategy, so they have different criteria and they may be in different trades. So it's not at all a mechanical way of trading, in my opinion.
Okay. So you found the value in this system where? Where did you find the most value?
Because I learned it and it just makes sense to me. Like, I see the things happening over and over again every day. And I think that's the most important thing for me, because if I see that this thing works more times than not, that's the most important thing, then I can use it because I'm confident in it. I build conviction with it. So it's like, okay, this actually makes sense. And this like explains why I don't actually trade order blocks. That's also a very big concept of ICT, but I don't trade it. Why? Because I don't see how it could work. There's now 10 different order blocks on the 1 minute time frame, on the 50 minute if you go back, like, but they don't work, so I don't use it. Like, I just make sure that the things that I learn from people, that I actually see them on the chart every single day. And so that made me follow his concepts a little bit because it makes sense to me.
Okay, cool. So as you said, there's different concepts in ICT. So one trader may be long, one trader may be short. Like, those are all different things that almost, I think, all systems, because there's a level of interpretation by the trader and it's going to impact how they trade the system. The main thing from this whole, conversation we have so far is you found something that has an edge that you understand. And that's really what traders should focus on. Like, if you're trying to, follow a system and you're like, dude, I don't get any of this, like, you might need to look elsewhere. Or you may find a system that like puts you in this situation as a trader that makes you feel really uncomfortable all the time. There's guys that are more prone and driven towards or gravitate towards like more scalpy type stuff because they don't like to hold longer term positions, where a really long term position hold or a one trade per day system may not work very well for you, right? You'll feel too antsy. You'll feel like you're not doing anything, and then you can't really hold a trade because you want to get out of the trade because you're fearful or whatever, right? So you got to kind of find a system that matches who you are as a trader. And that's great that you found it. And there's so many other systems out there. Just find what works for you and what you understand. That's the most important thing that I can think of when it comes to trading. Find something that you understand and take whatever pieces you need from it. You don't have to use the whole thing. How do you take any strategy to make it your own? That's kind of a jumping off point. So how did you take ICT and what did you take from it and how did you make it your own?
Well, so like I said, I never directly learned from ICT himself, but I took some concepts from some people that actually already learned him and can explain it like in a shorter and easier way.
Mhm.
So for me personally, the market maker models, like I said, and liquidity is the most important thing. This literally like the first step in my trading strategy. I look for, okay, there's some reasons why the markets move, and that's what ICT SMC also teaches. So it is, we rebalance always to gaps, we rebalance to equilibrium, to discount, premium, and we take out liquidity and we generate liquidity. Those things, I think there's four. They're already always in my head, like always in my head, and this is like a core, I would not say an ICT concept, but just a way to view the markets in terms of ICT. Like we always are gonna do one of those four things, and then I take that a next step, and then I combine market maker models with that. So yeah, market maker models, I would say it's not like a beginning concept of ICT. It's more like when you really dig deep into it, this is where you most likely end and have found like your edge. But yeah, I would say those four reasons why markets move, and just determining drawn liquidity, market maker models, equal highs, equal lows, news highs, news lows, all of that stuff, is what I took from ICT himself.
Cool. And then how do you find, could you give us like an example of maybe a setup that you would stock and look for like on a chart and like point it out and say, this is what I see and this is why I interpret this way? I think that would be super helpful to the people watching.
Yeah, sure. To be honest, I don't trade this price action. It's pretty shit. We're at all-time high, so um, it is
You
not
really don't have levels to lean on. It's just out in
r-
blue sky. There's
exactly.
nothing
Yeah,
up anywhere, right? It's just up there.
yeah. But if I could give like an example, let's say we're like in an efficient market. Let me just draw something like this. Um, this is the main way of me looking at the market. So we have. Wait, let me just switch this color real quick. Make it clear for you guys. We have some kind of consolidation on the top here. I'm in a bull market, so I'm looking for longs. We go down, we make the sell side of the curve. So this is where people just keep selling, and I see this as like a manipulation. We hit some certain key level, and we react of that key level. We have some kind of smart money reversal, what ICT calls. We do a market structure shift, whatever. There's so many names for it. I don't even I can't even keep up with it. But this is essentially what happens. We have this market maker buy model, right? This is how I view the market. If I'm in a bull market, I'm looking for this. I'm looking to position myself right at the reversal or somewhere in a continuation retracement leg to trade higher towards all these highs, right? So the beautiful thing about the market, what really made me just a little bit passionate about trading, is because everything is fractal, and it's so beautiful to look at a market when you understand that everything on a 1 minute time frame can replicate itself onto the higher time frame. So let's say just hypothetically, this is like a 1 hour time frame, right? Let me make this bigger. Then I can look for the same thing that I see here, but on a 50-minute time frame, right? So let's say here we have the 50-minute time frame. This exact thing that you see here, so this whole thing, it's the same. Wait, let me try to make this smaller. It's the same, but then right here. So if I zoom in right here, it's actually just we have some buildup of liquidity here. We go down, we have the smart money reversal, and we go up like this. So this is basically the main way how I look at the markets. I combine market maker models inside market maker models. And so if my drawn liquidity for my trade is going to be here, I know I can let it run towards these highs because I'm trading a market maker buy model here inside a bigger market maker buy model right here. So that maybe seem complicated when you first look at it. People that trade ICT, they must know this concept mostly. But yeah, that's basically how I look at the market. I combine market maker models. I look at liquidity here, for example, mostly on this consolidation. We have the equal highs or trend line liquidity, like all of this. It is just like liquidity where price can move so fast to, instead of, let's say, we have something like this, right? This is just one clean high, whereas if we have something like this, we can it's just a pool of liquidity, right, all the way to the top. So yeah, that's pretty much it.
Okay, so that's super simplified, but kind of some advanced topics. You're talking about fractal and kind of risking off like lower or higher pivot highs, at least on the upside after you get the reversal, and then you're looking for lower time frame entries. So it all makes sense.
Yeah.
How do you back test, and do you journal? How does that fold into what you do every day? And do you find value in that?
In the beginning, I definitely did backtest using those tools that were out there. I think Forex Replay or TradeZilla, I don't remember. But to be honest, once you get better and better in like analyzing the markets, I think backtesting like from 2 years ago, even like a few months, it doesn't really make sense, because you just have so many factors. I mean, at least for me, my trading strategy, it requires a lot of things. And just replaying candles forward, checking off your strategy is just not gonna do it for me now, because there's just I mean, you're not really in the trading session, if you get what I mean. It's just you replay the candles forward, and you don't really get to live that psychology aspect of trading, if you understand what I mean. So yeah, nowadays I don't backtest. I do it on my own way. I just review the past week's trades. I review my today's session trades, let's say after FOMC, if I'm going to trade. And that's basically the way that I backtest. I make sure that my backtested price action is from yesterday or from a week before, because then I know exactly, okay, what was I thinking at that time? And it just is way better than just, in my opinion, going back 2-3 years ago and then just trying to see if your strategy is profitable, because the markets, they change, right? I believe it is an algorithm, but still, you need to have some kind of emotion when you're backtesting, and I miss that with most software tools.
Got it. Yeah, no. And this is where, I am big on backtesting. I am big on data. That's not your cup of tea. And this is what's great about trading, is it doesn't matter where you align and how you align yourself. You can find edges everywhere, right? I believe through backtesting, it builds the conviction. And I know you backtested early on, but I know forward testing for me, or replay, still does actually help me keep my emotions in balance. And one of the reasons I don't play bar by bar, I actually use Sierra Chart, and Sierra Chart is a tick by tick, and you can pick a random day, and then you can actually fast forward to your setup and then watch the setup live, and you'll still sometimes feel those emotions you would feel if you were actually taking the trade. So I see value in it. You may not, but that's the great thing about trading. It doesn't matter. Like, whatever you find value in it is important. And just like if you have a strategy, you feel like you need to backtest it, that's a good starting point where maybe other people don't backtest. And it doesn't matter. It's like, as long as you can find an edge and you can replicate that edge, that's all that really matters in trading. So it's kind of cool to see that 2 different styles, 3 different styles, like all styles work. You just got to find it. Yeah, TFD is the only way to become disciplined. I wouldn't say it's the only way. We do absolutely encourage people to try to get more disciplined, do the morning check-in, do, all the stuff that, we encourage people to do, because there is value behind it. Traders that journal and put in the work have better earnings. They make more money. And that should be something that drives you to be like, oh, so if I do this, I can make more money. Yeah, it's not the fun stuff, but you can definitely make more money that way. Let's see here. What else we got? Testing, not just copying. For struggling traders, boom and bust cycles. Do you know anything about boom and bust? Are you a boom and bust trader?
Boom and bust? I've never heard about that. What is that?
You've never heard boom and bust? Really? No. So, it's basically a trader that will go in these cycles where they're overly aggressive, and they sometimes rely really heavily on luck. They'll get into these cycles where they're booming, they're just killing it. But what happens is, once they have that big boom, because they don't really have sound risk management, they end up blowing all their money. Very much like what is reminiscence of a stock operator. That guy, the guy that was portrayed in the book, they believe was actually a real trader, but he went through those big boom and bust series where he would get short a market with super high conviction, and he basically like held the keys to the market for a while. And they're like, man, you got to sell out your position. He ended up eventually losing all the money again, and then I think committed suicide, maybe, I think what it was. But he was a boom and bust trader, right? This is back in the 30s or 40s or whatever. But basically, that is a boom and bust trader. You make a ton of money, but because you don't have the risk, which is technically one of the parts that makes you really aggressive and good, but also is your downfall. So that is a boom and bust trader, in my opinion.
Yeah, I don't think I'm a boom and bust trader, but so definitely
even kill, huh? Even kill, you keep your risk consistent. That's good, man.
I mean, no, not at all. I mean, I'm
okay,
like boom and bust, like you described like a couple of minutes ago. But I do definitely struggle with my emotions. I think that's like the last step. But I do want to say, like, if you don't have an edge yet, I think a big misconception is that you need to focus on your psychology. You need to get your emotions in check. But I think that's like a big misconception, because if you don't have a strategy, like the reason why you got stopped out is because you don't have an edge. It's not because you are bad at your psychology or managing your emotions. So I definitely think edge comes first, and then you need to focus on your psychology, and that's where I'm at currently. I need to really focus on building the best habits to become that consistently profitable trader.
So, what are your biggest issues right now with your emotions? Like, if you don't mind sharing, what do you struggle with?
Yeah, the biggest issue I would say is I'm someone that really tries to understand every single movement of the market, and I realized recently that's not how it should work. Like, I need a lot of things. Like, I have a rather complicated system, I would say, but it makes sense to me. So that is nice. But I need to watch out that I don't go too further into like trying to understand the algorithm of price, because that's not the end goal. If you realize, like, the end goal is just to make money from trading, right? So I don't need to understand perfectly how every single move happens. I just need to be there when my system tells me to. So yeah, I think that's the most important thing. I'm trying to catch something that doesn't look ready yet. It does check off my system, but it is not damn clear. I'm just trying to get into a trade because I want to make money. I think that's the biggest thing. Yeah, focusing on the actual setups that I know that scream at me, let's go in. And if you just try to take some little trades that you think they look good, I don't think that is gonna benefit you in the long run, because I've been there. So yeah.
Yeah, and then you look back through the day and you're like, man, if I would just stop taking all these random trades, it would stop eroding the money that I make from the good trade. Like that's very common. Cool. What else do we have? Let's open it up for some questions for now. I think getting some questions here would be cool. I have a picture of the next. I have a picture of that next to my monitor. Emotional boom and bust. Oh, okay, got it. Yeah, it's a real thing, and there are traders that, that is a thing they deal with. They're very aggressive. That's what makes them great. It's great when you're on a hot streak, but when things don't go your way, your account's gone very quickly. So it's really balancing the aggression with the appropriate amount of risk. So you're risking appropriately where you have enough room to be aggressive, but you're not risking so much you're going to jeopardize your account on any one day, right? Or 2 days, 3 days, right? You need the runway, that or slow down. Okay, bro, this ICT level or breakdown was next level. The way you explained it, liquidity PD analysis finally made sense. Been testing it in the Asian session, pure gold. Also, the futures make us.
Hey, thanks, man.
Yeah, that's awesome. I'm glad people are learning. That's awesome. I learned something too.
I could teach you about order blocks and stuff, but this is actually what makes the most sense, and maybe that people find valuable. So yeah.
PD arrays make everything instantly. Yeah, so kind of the same thing. ICT works 100% for me. Yeah, we've had a lot of funded ICT traders. It does work. Like we've mentioned, the systems do work. It really comes down to the foundation of everything, right? It's not any one thing. And I think the more you trade, you realize like, no, I need a system that I understand that I can follow, that stays consistent. Then I need to be consistent as a trader, and it's all part of the foundation. And then you have to have proper risk management. So that's another component of the foundation. You got to have everything aligned, and then everything works together holistically to actually help you make money and make money. Cool. What else we got? 100%. I thank you for saying that. We try our hardest to actually be more of a traditional brick and mortar prop firm. And that's by, giving people the information they need versus the information they want to hear. Kind of, it's like, no, you shouldn't risk this much. You should actually be risking this. A lot of people are like, no, I want to gamble and I want to do all this stuff. And it's like, that's not here. Like, go elsewhere if you want to gamble, because we're really trying to encourage the right things for long-term success. Thanks for the feedback. Using that man's name for sell. Someone used Bowie? I'm not sure.
What the hell?
Do you know that person?
I have no idea what that is.
Oh, maybe are you saying Bowie for the sell? Yeah. So the reason we do Bowie as the sell name, it's anybody that's joining the stream that gets value from this and they want to show appreciation, and you're going to buy an account anyways, use his discount code. That's the only reason we list.
Oh, I didn't even realize.
Yeah, I think that's what he was. I think that's what he's saying.
I swear to God, I just realized my code is there.
Yeah, your code's there. Hopefully we didn't offend anybody, but that's why we do it. It's to show appreciation for somebody that's spending an hour of his time with us to share information that may be beneficial to people. And it's like, hey, why not give them the credit for that? So that's why we do it. What else we got? What else we got, Raj? Is that it? I think that's it. All right. Oh, thanks for sharing. Yep. For struggling. Yeah, that's an affiliate code. That's basically what it is. And kind of just already explained everything on that. For struggling traders. Okay, we're going to keep doing. What is the ICT PD array that you use for entry? Yeah, I don't know what that means, but it sounds interesting. What is it?
Yeah, PD array is just a bunch of things that you can use to basically use as resistance or support, however you might call it, for an entry or for key levels on your high time frame. What I like to use is not order blocks, not what people call CISD or stuff. I really like to use gaps, and especially like just inverse fair value gaps. So let me see if I have something to show you. Let me see. For example, let's say I'm ready to take longs here. I identified my market maker model. In this case, it's going to be a buy model. So I explained to you guys earlier like how I see the structure. This is basically the same, but obviously if you look at it in a real market at all-time highs, when we are chopping around, when we have all FOMC coming, it's not going to look that clear like I showed you in like a clean line chart. But basically, let's say I'm trying to take a long here towards these highs. I see the smart money reversal happening right here. We have some SMT there. Okay, what do I use for entry? I just basically look for, like, on the left, a fair value gap if I'm looking for longs, a bearish fair value gap to get inversed. So let's say I think the setup got confirmed, yeah, right here. So let's say this fair value gap. Okay, what do? We inverse this fair value gap really aggressively, and so now I know, okay, we can use this as support. And so that's exactly what happens, right? We have the smart money reversal, we inverse this gap aggressively with this candle. So whenever we close here, this is where I see like, okay, the buys are confirmed, and now I can use this level also as an entry. Now I like to use just market entry, so you'll find me just quickly just taking a market entry already there if the risk to reward is looking good. But you can obviously enter on gaps, or what I like to use, this PD array, inverse fair value gaps. So basically, if I fair value gap, that gets inversed, and it's the exact same thing if you invert your chart, right? Let's say we want to play a market maker sell model. Okay, we inverse this gap after we have the smart money reversal, after I think that we're ready to go down. So yeah, that's what I like to use.
Cool. Yeah, clear risk, reward ratio, clear target. You're targeting the highs. Do you have so are you an all-in trader? Do you scale in, or do you just go all in and then scale out, or do you just take all in, all out?
I usually am just all in, but not all out. I do have some partials if it makes sense to me. Let's say we have a clear target. Let me show you here. So let's say here, for example, I may take some profits already, just because we are already above 2 hour, and I don't want to risk it all the way going towards here and then just stopping, like just engineering more liquidity and going back to
going the other way. Yeah, exactly.
So yeah, I do take partials, but I don't really scale in. If I'm in a trade, I'm usually in full risk. Or let's say it's not looking that clear yet, then I may enter already with like 1/4 of my risk, really just very low risk, to just have a feel that I'm in a trade to prepare. If it's actually going to be a setup, then I have a better entry. But usually I wouldn't recommend it. I just go in, but partials, they definitely make sense. But also something that I noticed, like I sometimes take partials that don't really make sense. So for example, here, I think this partial makes sense, this high. You can let it all the way run, but it's always good to take profits. Like number one lesson that I learned in trading is just take profits. But if it's not clear, I would just have one TP, one entry, go all in and all out. So yeah.
Do you find that taking partials off? Because I'm an all in. I'll get all in on one position and then take portions off at set areas, right? And I trade off deviation levels, so it's very specific areas that I'm looking for.
Yeah.
Do you find that it's the most profitable, or is it the most profitable for you because it helps you hold the trades longer?
I'm kind of stepping off taking partials though, because let's say, for example, I'm taking a partial right here, or maybe this high right there. Let's say I take a partial, but then it goes back to break even. Then my risk to reward is so shit. Like I didn't actually made anything on this trade. So I think it only makes sense if you really have like a clear drawn liquidity, a clear other target. But for example, here, like this is obviously like your last target. We are at all-time highs. If we bridge this high, like what else are you gonna target? Like just the sky?
I don't know. Yeah, exactly.
There's nothing else. You can use standard deviations and stuff, but I would just focus on liquidity getting taken out. You are out as well. So yeah.
Cool. Awesome. All right. What other questions do we have? And let me look at the notes that Raj put in here for us. I thank you, Raj. Thank you. Strategy meeting execution. What should traders look? Oh, that's kind of like specific to us. I guess we can ask these. What should traders look for when they're looking for a firm? Hopefully you say all good, nice things about us, but if not, that's cool. No pressure.
Question for me.
That's for you.
Yeah. I would say just founders that you think that are not going to scam you, like they are genuine. They actually try to make the journey of a trader better. And that's the feeling that I really just had in the beginning of TFD, because they just don't really care about flashy things. Like, for example, one small detail, like you guys don't post payout certificates. And I think that's a beautiful thing, because that's actually the main way how prop firms nowadays, they make sales, right? They show their payout certificates, like this guy made 112K from this 50K account. Like that doesn't make any sense. And I'm happy that you guys understand that. That's not the goal, because if you focus on the money, like you don't even have an account yet, then you're just doomed to fail, in my opinion. That's the biggest reason.
And the reason they do it, think about a casino. When you walk into a casino, what are all the numbers doing, right?
Yeah.
All the slot machines have big old payouts, jackpots, blah, blah, blah. You can win this. And it's like, dude, that's not reality. You're not going to walk in and pull a slot machine and get all that money. And that's not the reality of trading. Like, we as traders, right? Me and Josh and some of the other founders all got sucked into what prop firms were, right? We got sucked into this dream and chased it. And what we realized, years and years into trading is like, you got to focus on the right things, or else you're never going to get beyond being a gambler. And as a firm, we can 100% say we've never denied a payout. Like we never have, we never will, because our payouts, they're different than these other firms, right? And not just the payout thing, but we can actually say that we're aligned with traders, because when they make money in the brokerage, we make money. So when we give them suggestions on, hey man, you should probably tune your risk here, or shouldn't do this, or should do this, it's coming from, one, a good place because we want to help traders, and two, because we also want to protect our capital and help them make money, because when they make money, we make money. So it's a completely different model than these other firms have done. And that's why I think we can stay more true to what we're trying to do as a company to help traders. And I wish we could bring in more traders to help more traders and just continue, that cycle. But I don't think we attract as many because we don't share the payout stuff. We don't let you have like 20 million accounts, and we don't, advertise, oh, it's a 300K account. It's like, well, technically it's not. It's 5K drawdown. Like, that's not 300K. But yeah, it's all advertising. So we try to cut out all of the BS to, show traders really what's important, which is the analytics and the journaling and all the things that we have that other firms don't. And try to structure differently. So
it's actually so sad that it's hard for you guys to gain actually market share, because you're just honest, like this is how it should be. And I mean, another thing, for example, that I'm so frustrated about every single day, like these prop firms with like 50K accounts, 100K accounts, 200K accounts, like there's even like 500K accounts. Like, it is not a 500K account. It is just 2K drawdown. It's just that you have. And so I think in the beginning, you guys just deleted that completely. Like, it's not a 50K account. It's just you get 2K drawdown. This is your max loss limit. This is your daily loss limit. That makes sense, right? It makes much more sense than having 50K capital, 100K capital.
Yeah, but here's the thing: is we actually had to add like, hey, similar to a 50K account, because people got lost and are like, well, you're only giving me this much, and this one's a 50K, and you're only giving me like this much money. It's like, no, they're the same thing, the same risks, the same everything. We just don't use the sleazy advertising. We're just saying what it is. It's like, no, you're getting a 3K drawdown. That's your risk. And then your margins technically can change depending on volatility of the market. So NQ a couple months ago was, a set amount. I think it was like 20 something thousand, and now it's 30,000, right? So your margins actually adjust. And that's like it's a bad way to advertise, where we try to cut through it. And it was actually Josh's idea. But what's funny is it's not getting traction. Like, people don't care. They like the shiny lights. They like the big jackpots and stuff. But again, we'll just stay with what we're doing. We're trying to help traders, and we'll just show it by our actions. I'm really excited for when 2.0 comes out. You already got access to 2.0, right?
Oh yeah, I did. Got a sneak peek of that. I mean, I'm already journaling in that beta, so it's just really looking nice.
Yeah, and I think we want to open it up so you can hopefully connect other accounts to it through other firms, so you can actually just go one place and journal. Because what we find right now is, like, people will use it, but because they have other copy traded accounts with other firms, which is fine, they don't have that data. So now they're uploading it somewhere else. It's like, you might as well just upload it all in one spot and be the one-stop shop. That I think that's hopefully where we get to, where they can put all their data in there. But cool. All right, let's Bowie's experience with TFD. We already kind of touched on that. Let me see what else we got. Trading psychology and managing tilt. Are you a tilter?
I am a tilter, definitely.
Okay, so I don't think I've ever met anybody that's not like prone to some amount of a tilting. Like, I don't know if you can not tilt. Like, it's tough. What do you do to manage tilt? Like, what's your strategy on that? How do you cope with it?
I try to have some rules. For example, right now, I just make sure that I don't have more than 2 trades a day. That's like, when I am over that, I just need to close my monitor. But I also, let's say I have 1 loss, then I get 1 more try. But I don't think, to be honest, those rules are really going to make you avoid going on tilt. I mean, but it's just the first step, right? I think something that also helps me is just like, whenever you have a loss, just quickly go outside or take a breather. Just don't look at your monitor for a couple minutes. I think that makes the most sense, because when you have a loss, like those 30 seconds after that, you're deciding if you're going to take another trade, a revenge trade. I think that's the main trigger for you to go on tilt. So just take a break. It's hard for me. I'm not saying I'm doing it every single time, but it definitely helped me. I did it a few times. Just get off the charts for a couple of minutes. Do some meditation.
Yeah, I think that is definitely an awesome, actionable way to do it. Is like, figure out how many trades in a row, and then stop before you get into it. Hopefully you stop before you get into it. What is his process for recognizing? Already kind of explained that. Why do traders often tilt? You already talked about that. Revenge trading, losing. It's all part of it. You don't want to lose. Nobody wants to lose money.
Yeah.
And what's hard with trading is sometimes when you tilt and do something really dumb, the market's like, here's a big pile of cash. And then when you do everything you're supposed to do right, follow every rule, the market's like, nah, go ahead and give me all your money. So it's really hard to balance those two things, I think. What else do we have? What other questions do we have? And how close are we to the giveaway? Because I know everybody wants the giveaway. Giveaway. What do we got? Raj?
What are they? 500K accounts? 200K.
That looks like a good question for you.
Do you chase if candles is pumping through inverse value gaps, or just wait till it close? I have seen some traders go half size when it's pumping and then fill in other half in retracement. How do you approach it? I don't really go in 2 times. Like if I'm going in, like I'm in, and I usually just do a market entry like I explained. Where's my mouse? Here. Yeah, if I see an inverse value gap, I mean, it's so hard to find an example here. Let's say here. Where is it? An inverse, for example. Let me see here. It could be a potential other entry. We have an inverse. Whenever we close here, I mean, I just market entry. I know, yes, there may be potential that we tap the gap, retrace, and you can enter here. But most of the times, I mean, if the risk to reward is good, I will already just enter after we immediately close, just a market entry without having a limit here. I don't really like limits. Only if the risk to reward makes sense though. And another thing, like something that I learned, just wait for that candle to close, because you may seem like it is a displacement, it is displacing, inversing this gap, but it can still close like very, very bearish. So waiting for that candle to close really aggressively, like this is where it makes most sense to me, because we actually inverse this. It's a very big candle. The wick is not too bearish. This makes sense to me that this is just continuing higher. So yeah, I don't really like to use retracement entries if it doesn't offer me better R.
Ooh, yeah, have fun with that one.
Yeah, I'm sorry. I like to say everything that's on my mind.
Oh, no. I was talking about, what do you think is a realistic timeline to change bad habits such as overtrading? Not what you just explained.
Oh, okay. What do you think is the realistic timeline to change bad habits? You can start.
That's why I said have fun with that one.
Yeah. I think you can start any day, but it's just like, how many times do you need to make the mistake for you to realize it's not gonna make you better? So for me, I made the mistake maybe already like 200 times, but over the journey, I'm learning other things, and I'm finishing my puzzle. Like I already have my system, but the psychology puzzle is still something that I need to fully master, like actually focus on building good habits. And that takes time, right? I think some study or something, it's proven that you can build a habit in like 9 or 21 days. I'm not sure, but I would say if you actually focus on following your habits, following your system, like actually just looking back on your trading week and saying like, okay, I actually followed my system. If you can do that for 21 days, then I think it's going to be a habit, and that's the shortest amount where you can transform your habits. So yeah, it's a journey, man.
Yeah, and I think, speaking with all the different traders I talk to, lots of traders, it's different for every trader, and that's kind of a loaded question, because depending on what day it is, you may follow your system really well, and then the next day you'll just totally not follow anything. And it really comes down to looking at your loss count, how many losses you have, and when you start letting emotions creep in. And that's the main thing, is you got to figure out what that like threshold is. And once you get past that threshold, I don't care what plan, what rules you have. Like, you know how many times I said, I'm not going to overtrade today, and then overtraded? Like, I can't even keep count. Yes, you'll get better over time with that, but unless you find where your like break point is, you're going to continue to overtrade. So step one is figure out where you start getting emotional, and that is through journaling. I don't care if it's on a piece of paper or whatever. Take a trade, End result is a win or loss. Okay. Next trade, win loss, right? You're going to find a breaking point in your trading where those emotions are going to start taking over, and you're going to be like, I don't want to journalist trade. F this. You're mad. Your shoulders are all tensed up. You're freaking wanting to punch your monitor. Like, you're beyond the point of tilt. You're already tilted, right? Find out when that, before that happens, and then set clear rules around that. So you stop yourself beforehand, and then you'll be able to follow your habits way better. That's a suggestion that I have, and it works. I've seen it work for lots of other traders. Yeah, lock this risk settings. I hope everybody uses them, because I can tell you, people, once we introduced Project X versus Rhythmic, Project X actually has a higher pass rate, and people make more profits in Project X. And the only difference is the risk settings. If people use daily risk, it lets them perform better. That's the bottom line.
I think the lockout
risk
feature
settings
as well, right?
Yes,
The lockout
100%.
is so good.
Because it stops you. Like, I don't care what you want to do, it stops you. Like, I have a stop at my brokerage, and if I want to change my stop, I'd have to call them and be like, yeah, but I don't want to, because I would be embarrassed. Like, could you go ahead and remove that stop? No, you're not going to do that, right? Same thing. Use the stop, the built-in stop. That's a great way to stop yourself. Figure out what risk you need, though. Yeah, thank you for the positive feedback. We're trying to get people to be disciplined, because understand, once you get out of the assessment, right, you're not just going to sim fun land, right? You're going to a brokerage account. And when you go in there, who do you think's putting the money in there for you? We are. And we're investing you as a trader. So we're going to give you the best habits we can, and try to help you actually be a profitable trader before you get there, because our money's on the line. If you make money in the brokerage, we make money in the brokerage. So that's why we try to give you the tools ahead of time. So it's to help traders, and we're trying to make money in the brokerage. What else we got? That's a you, Bowie, question.
Explain the criteria for selecting a valid inverse fair value gap. There's a ton of inverse fair value gaps on your charts probably right now already, but I would say the fair value gap that just aligns with everything else from your system. For example, I need to go back to this as price action, but let me maybe take Monday, for example, now. It's not really the best price action. Let me see, maybe here. Yeah, let me just try. So, for example, we have an inverse fair value gap already right here, right? Because this fair value gap, it gets just blown to, right? With this candle, we just disrespect this bearish fair value gap. But I'm not going into a trade here. Why? Because my criteria has not been met yet. So I want this low to get taken, right? We form some SMT right there. We have some other things. We tap a key level. We are at a key time of day. All those things that are for my strategy. You can watch it on my YouTube. I just don't gatekeep it. This is how I trade. They need to be met before I am going into a trade. So let's say we actually have now taken out liquidity. We are at a key time of day. We have all the things that I need, which is a lot. I'm not going to explain you right here. There's videos of there just explaining it every single example. But let's say now we actually have it. We actually have everything that I need. And now I look for this inverse fair value gap to get inverse to. And now we go up, right? This is where we actually react from, because the market is ready to reverse. So I would say the inverse fair value gaps that make sense to me, that are valid, are the ones that come directly after my system is checked, right? So this is here the candle that confirms this inverse, and it is after we already have all this context, all these things that I use been met from my trading system. So yeah. That's what I do.
Cool. And if you guys want more information, kind of like on the nitty gritty of everything, as he said, he has a YouTube channel. You can check it out. If it's for you, it's great. If not, it's not for you. Find another strategy. That's the great thing about, checking people out, is you can see people actually live trading it and using the strategy, and you get realistic expectations of what's actually going to happen as a result of trading a real strategy. Not just, when I don't know, P&L porn, whatever you want to call it. Like, where they flex with their big numbers. It's like, yeah, what did they risk to make that, right? That's why we bring actual traders on our shows to share, like, hey, these are real world experiences. We're not bringing on guys that are like, oh, I made 300K yesterday or blah blah blah. It's like, that's not really where people are as normal traders. They're just not risking that amount, and it doesn't make much sense to bring them on because people don't get much value from it. What else do we have question wise? And are we ready to do the spin or marbles or whatever we're doing today, Raj? What do we got? Oh, it's the spin. I see the spin. That is quite a few names.
Oh, that's a fancy spinning wheel.
It is I like the marbles, but I guess he didn't want to do it today. All right, Bowie, it's your time to mess up the name.
Damn.
Be a big, long name. Yes. Nope. It's going to be an easy one.
Okay. Congrats. Who's this? Ui, Mixun. Let's go.
Congrats. All right. Congrats. If you've won before, you can't win again. Same thing. We always say it.
Congrats, Ganesh Kartik. Woo!
Got it. You nailed it, bro. You got it. All right. We'll open it up a little bit more questions. We always try to wrap up, around the hour mark. So we'll answer some more questions and probably sign off. So let's see. Is this a statement or a question?
Emotion matter when trading. When you enter trade and start fixating on the candles instead of the overall picture, you lose. Yeah, exactly. Like there's many times where I just neglect my entire trading system because one candle is like so strong up or so strong down, and you're trying to FOMO into the short or the long, whereas it just doesn't even make any sense according to your strategy. So that's a good point that you say there. Don't focus on individual candles if it doesn't make sense to your strategy, right? So yeah, it is forcing me to become a better trader. Yeah, for me as well.
Yeah, most of our feedback from people is like our systems are actually helping people, and that's super rewarding for us to know that like we are making a difference. It's not like we're going to make trading superheroes or something with the stuff we do, but we're at least going to help people improve. And that's the only thing you can really guarantee is like we're going to help you improve. As long as you're using the systems and really putting in the effort, you will get better as a trader.
Yep, higher time frame is really important. I always start with the 4 hour, maybe daily, 1 hour, 50-minute. I think those are really the base framework time frames. And then once you understand that, you can take that to the lower time frame, then you can look for maybe if you're a scalper on the 5 minute, 1 minute. But definitely like my base framework also comes from those higher time frames. So yeah, 4 hour, 1 hour is very important. Activities helping manage risk, which is 90% of the game. Yep. I love the lookout feature. I love the not focusing on money, just like focusing on journaling. Like I hope you guys don't see my journal entries.
I'm gonna look right now. I'm gonna pull it up.
It's gonna be like I just scream my life, like my problems, my like what do I need to change? How do I not need to do this again? Like it is really like a playbook for me. What is RDRB and it works in candlestick? I have no idea what that is. Sorry. Can you explain it a little bit more? RDRB. Best time in 15 seconds. I tried trading the 15-second time frame, but it's not made for me. Like the lowest I'll go is the 1 minute. And yes, I say that the market is fractal, but I'm trying to not get a heart attack. So
15 seconds is fast, but I met with a scalper yesterday. He's going to the brokerage, but I think we're going to try to have him on the show, but he's been trading for a really long time, like 20 years, right? He trades, and I thought it was an algorithm because how much he was trading. He trades like 1,500 times in a day.
What the?
1,500 times in a day. I'm like, I thought you were an algorithm. He's like, no. I enter on every trade. I'm like, oh my gosh, but super knowledgeable guy. He's kind of playing a different game than a lot of people play, but he's been in the field for a while. So maybe we'll bring him on. But super interesting. He's an ultra scalper, and he was trading on like the 5-second chart or something crazy. I'm like, I don't even know how you do that, but he does it. It's pretty cool.
So when does that guy tilt? Like after 5,000 trades?
I don't know. We'll have him on the show. We'll ask, because I'm sure he goes into tilt sometimes. But yeah, interesting. Most trading I've ever seen of any one trader. Many orders, like nuts.
Mm-hmm. Redistributed and rebalanced. Oh yeah, I mean everyone just calls different concepts this different name. I just use like the main things that I use, that I said in the beginning. Like, just I know that the market will always hunt liquidity. They will always rebalance. They will always generate liquidity. If you think, I think that's what you mean with redistribution and rebalance, right? Yeah, it's a big thing. I use it all the time.
Yeah. Yes. Well, you pay through Sierra Chart, right? But once you go to live, you can have Denali, plus we can do the was it Teton? I think they call it either Teton or whatever, order routing, right? So you can do both. We have traders that are using Sierra Chart right now in our live. But I prefer Denali data. It just is very good data. What else we got? I think that's pretty much it. So,
yep, that's just what I trade. ICT plus quarterly theory. Like I said, I take different concepts from different people, and the concept they need to make sense to me before I take it in my system. So ICT is a part of that, but quarterly theory is definitely taking 50% of that as well. And to be honest, quarterly theory is also built on top of ICT. It's just like an expansion. A way of viewing the markets in terms of quarters. Yeah, that's how I trade. I have like a big video on that. It's like 2 hours long if you want to dig deep into that. But yeah. Yeah, I've never traded Apex. I don't like just the fact that they are like trailing intraday drawdown. I don't like that. But yeah. Some people they do. Oh yeah, I heard that you guys increased the accounts, right? The amount of accounts that you can have.
Yeah, but we didn't change the initial investment risk that we put in traders. So you can have any combination, I think up to 4, but we're not changing the actual risk that we put on traders.
Yeah.
And we can also, if you want to have more than one account, we can do multiple accounts across multiple brokerages. So we can technically let you have all those accounts, or we can just combine them. But people like to copy trade. It helps them like the psychology component of it. So we're like, why not?
Yeah.
Cool.
It's just another way to enter the market. Like it's a little bit sad. Like, yeah, you have to be like the others to get some attention.
Yeah. What else do we have? I don't think we have anything else. So we can go ahead and end it now. Right on time, right on schedule. Bowie, thank you for coming in. I think we've shared his YouTube. If you guys want to check his stuff out, like, look, just find out if it's for you or not, right? He's done a lot of work on it. He understands, how it works. You can watch a show a couple times and fast forward or whatever on YouTube and see if it makes sense to you. If it does, maybe it will be right for you. But as always, like, no system's perfect. It's all about risk management, emotional control. It's about the foundation of all the stuff we talked about. But check his stuff out. We'll share his YouTube channel. We have a sale right now, 60%. Use Bowie's code. That would be very, I'm sure you'd be happy about that because it does help him out. But yeah, thanks, guys. Thanks for tuning in. Appreciate it.
Thank you, guys.
Later, guys. Peace out.
Bye-bye.